excited to do that.
Yeah, I know you were looking forward to that this morning. TMTG, they call it. So there you guys have it. The Truth Plus mobile app is now available.
Great. But yeah, so when you get the president pumping the stock, maybe it's something to take a look at. Something tells me he'll lose his power to do this pretty quickly. Right? Remember that roaring kitty guy, right? Every time you tweet, he'd pump it a little less, and he'd pump a little less, and now no one cares about him anymore. You can only cost people so much money.
He's pumping it. He's pumping it all right, but can't come after him. At least that's what I would say.
Crime's legal, so you might as well just blatantly pump and dump a stock.
Well, right now, foreign bribery is you're allowed to bribe foreign officials, so you might as well be pushing on these tariffs right now. Hey, well, you want a Tesla? You might need to lower those tariffs.
It's wild. I was watching.
It's a wild world we live in, man. A wild world we live in, where certain things are allowed, certain things aren't. I just don't understand it sometimes.
I feel bad for CoffeeZilla. I don't know if you watch any of his stuff, but he's like spends his day trying to expose crypto frauds, and he just put out a video yesterday. He's like, I don't know what to do anymore. It just seems like crypto scams are perfectly legal. So I'll keep telling you guys about them, but crime's legal now. So right, go do some crime.
No, I mean that's just how it is at certain times, guys. It's just how it is, and it's more. Do you get it? Do you get And the truth is that it's not a justice system. It's a law-abiding system, guys. We don't believe in good justice. That's just not the way the world works, guys. It's just more about following laws. Laws change, though. And so you got to make sure that you're abiding by the laws and just trying to work the environment that we're in. Same way in trading, right? You got to trading dynamics change. You got to work the trading environment that we're in. Right now, the trading environment that we're in is uncertainty and changing dynamics, but those can all change back, right? And so you need to be just looking at the dynamics of how things are working out. And we all know what this is all about. It's just a deal-making tactic. The only question that I think a lot of traders have is, will the tactic work? That's what I think a lot of people are more concerned about, is that the tactic is not working here and that we're not seeing countries break. Like, just be like, no, but US, you are everything. We need to give you everything. Well, that's what hasn't happened. And until that happens, I think there's still uncertainty in the market. But you will see some countries break, because at the end of the day, they still need the USA.
Maybe. So that's the real question is, right? Do coalitions across other countries work enough, right? And that's, from someone in Canada, that's what our prime minister is currently proposing. I mean, he's going to go meet with the leaders of the EU and potentially say, okay, well, we don't sell the States our lumber anymore. We ship it over to the EU. We ship it over to Asia. Can these other countries play ball enough? I think is the really big thing. Can we all get together and hold hands and say, okay, we'll just cut America out, and that's going to be the big thing. So again, I still am firmly in the camp that we're going to fast forward a month from now. He's going to have gotten whatever concession that he feels like. It's like what happened in Canada, right? There's going to be these massive tariffs in Canada. We said, okay, well, we'll do something at the border. And then it was funny because it was what we were doing
coming
anyway.
Back here. Let's see if the SPY can do it for me. I need a little trend day on the opposite side of the game, guys. Let's see what happens, guys.
Yeah, we're holding VWAP pretty well.
Yeah, that was a nice little wick. Nice wick attempt and nice support hold. 498s have been holding all day on the SPY. Now I'll look to see if those 498s can kind of hold in, really kind of put a stand at that 498 now, and take 500, right? 500 big watch here. Let's see if we can take 500 and move quickly to the intraday high, right? You want to see that kind of be a big bar, bullish engulfing candle on this pullback, recover the 9 and take it. We'll see what happens here, guys, on the SPY.
Yeah, so far, right?
Here's 500. Let's go. Let's get it.
I like looking at the CFD sometimes, just because it has 24-hour trading. and just shows you, right? We came back down into this wick. So far, there's buyers. The thing, and I was chatting with a buddy of mine who's a technician. He said the thing this craziness showed you, right? The market ripping 6% on a tweet, is that there's a lot of people waiting to buy, right? Because the second, hey, there's a pause on tariffs and you just rip that much, just shows you that it's not, there are people waiting, and they want to put money to work. They're just waiting for the news to calm down. So if
and that's
that
the
occurs,
dynamics. That's the dynamic of the way the market works, guys. There's always money trying to come to the markets, not running away from the markets. The majority of money is going to the markets. Why? Because they're looking for a return, right? And so the only thing that you can ask yourself is the TINA trade dead, right? Things like that, right? And where rates stay higher, and so money stays in savings accounts and CDs because they're looking for the alternative. That's the concern, I think, here that is also at play, because where do you look for return in the market this year, right? It might not be in the market. It might be elsewhere, right? For some risk-free type of game, right? And so I think that's one thing that you need to be asking yourself, what's money doing right now, right? Is it going to go and look to try to get back into the markets, or do they expect rates to come down? So that's why they're not at camp, right? I don't know, man. I think it's a battle here. I think risk-free money makes sense for 2025 because in this environment, it's kind of hard to think that the SPY is going to come back to new highs, right? I did see a nice permabull, Ryan Dietrich, putting out that he expects that maybe potentially this could be the fourth time in history that the markets go down 20% and then actually close green for the year. So
good.
It just goes to show you guys, right?
Bet it right now. But again, the argument that everyone's making is that this is a fully designed recession, right? A stroke, again, as I said it before, a stroke of a pen created it. A stroke of a pen could get rid of it. Because tomorrow, you just go, that's it, right? Tariffs are over, and then the market, in theory, should go roughly back to where it was before, probably a little lower because of the damage and the uncertainty. But the problem with holding your money in T-bills is this is what's happening to T-bills, right? They're just continuing to not be that safe haven asset. So that's why I think even more than something like T-bills is just straight cash, right? Just cash in your savings account, just because people have gotten burnt pretty bad with T-bills.
Yeah, cash is king right now, guys. I think that I'm looking at it right now, guys. I don't really have the biggest long-term exposure, and I've been even like considering it right now as an opportunity, right? That's one thing that I will say. I think that in bear markets is times when you should be thinking about long-term investing, right? I think that it's usually the opposite that you hear out there, people buying long-term investments when the bull market's going on. Well, that's all great, but the truth is you get caught in the trends a lot of the times when you do that. You need to be thinking about when the market comes down. The good old Warren Buffett, I'd give it to him on that. When panic's in the street, that's probably usually the best time, right? That's why I was asking about the chart that I asked about earlier today. Where are we in the panic, right? Is this the everybody sell moment, right? I don't know if we've had that moment already. Those are things that you need to be asking yourself, right? Have we had that everything sell moment? And I don't know if we have had that yet. Another thing that I'm asking myself is, I still haven't heard anything about China or the US or Russia comment on Zelensky's messaging from yesterday about how China was starting to join the war. Watch out, because if there's anything that hits the tape about China joining the war with Russia, this market gets it could get a limit down on that mention. And so I'm not trying to put fear in the market, but there's a lot of uncertainty at play here, guys. So it's hard you're guessing in directions. That's what you're doing. I'll tell you right now, you're guessing in directions. So it's all about guesstimate, right? Guesstimate, right? Like, what is my risk? What is my chance? And I'll take the chance, right? That's the truth about trading. There's no guarantees. Nobody knows if the market's going back up. No one knows if the market's going down. The only thing that helps the bulls, of course, is just time always says the market comes back, right? And so the odds are to bet to the upside at some point, right? Now the question is if that point is today, right? The odds are there. I will say that. Always there.
Yeah. Well, it's one of those, do you think America's dead? Right? That's the
if your answer is yes, then you know what you're betting. But
well, you don't invest in America and move. Those are because you have to move, right? That was the same argument. I remember having all these same chats when I was a hedge fund manager in 2008. There was a guy who opened a hedge fund in the height of it when no one was opening hedge funds, getting money everywhere he could and just putting it into banks and everything. Everyone just like, you're insane. He's like, yeah. He's like, if my hedge fund blows up, the only reason my hedge fund blows up is because all these banks blew up, and that's the end of the world. So what do I care? My reputation is as a hedge fund manager is ruined. And then he ended up making multi 100% over the next number of years, and then retired rich and shut down his fund. It was just one of those moments always come in, and it was the same with COVID, right? Moments always come in where it's like at the end of the world is the bull case. It's like when the market crashed 35% in like 3-4 weeks. Those are the moments where you're like, okay, it's either done, and by it I mean the country and the world, or I should pile every bit of cash I can get and every bit of cash I can have, anything that I don't need over the next couple years into the market and see what happens. Now, this all recovered in a year, but what if it was more like a 2008, right? This 2008, 2009 right here. We've already done most of this. So what if we do another little spurt down, right? The people that were buying in this area and then just held, that is generational wealth, right? Who have the guts to do it. So yes, that's why I'm always saying I'm just marking these lows and picking my shot. I have a pretty full portfolio right now. I talked about this on Monday, and I got triggered into a whole bunch of names right on as things were pulling down because I have systems to do so. Right? Like Palantir, I'm in at this price. I could go through all of them if people cared, but a lot of names that I'm in, and the reason for that is nothing more than my system's telling me to buy, and we're holding above that level in the SPY. If we break that level in the SPY, I'll liquidate all these and probably take another little bit of a 5%, 10% haircut in my account and move on. But eventually, when I hit it, it'll be 50, 100% gains, and that's just the idea behind it. The only symbol I did not have triggered, which is unfortunate, was this SSRM, which I was really looking forward to. I just had to come down a little bit more, but all of these other names I bought. Most I'm up on, some I'm not, but portfolios.
SPY making a quick move here. Let's see if we get it, guys. Will we get the opposite of we got yesterday? Yesterday with a 15-minute sideways move that ended up doing the opposite move, right? Where it broke down from here. Let's see if it holds here and makes the move. I think this is very important because the VIX is doing the very similar move that it did yesterday, and then eventually made a huge rip up, right? Will we get that move back down? SPY up, right? Those are all things that we're looking at here. We'll see what happens and plays in. On my VIX short, I'm back to pretty much break even here. Looking to see if we cut down through the 84. I could also cover a portion of this just in case we get one more bounce before the real takedown. I'm just looking to see what happens here in the SPY. If we just start ripping towards like 504, 508, well, I got my pick and doing a little bit of a flip-flop today. And I think that's important, right? Even if you come in bearish in the morning, doesn't mean you need to be bearish throughout the whole day, right? Don't forget that, guys.
That's why I'm a systematic trader, right? That's why I encourage everyone to be a systematic trader because, you just have systems in place. Say, this is the time to buy, this is the time to sell. Because finding a bias to come in the day with is really hard for me because you're right. If you came in bearish, you're not changing that. Doesn't matter if your setups are right. That's why I had one short with BTU and then one long. So BTU obviously hit the target, continued to crush, but I can take the money, move on, and I've got my Pfizer.
Man, BTU has been such a disaster.
Yeah, coal. right?
It was. I remember when I was trading this during that run up, and it was a fun stock to trade. It has not been a
Oh,
fun
yeah.
stock to trade, man.
No, it's right. It's a dying industry for sure.
Yeah.
And yeah, that gap up fade again. I wish I could say I got all that, but right there's the blue arrow entry for a short. There's getting out and move on, and then Pfizer I have to the long side. Again, just looking for kind of overextended type plays here. So working on another strategy. I'll talk about that a little bit more if that ends up coming to fruition. But so far, not so much. So, but yeah,
All
it's
right, guys.
trying.
Sideways and boring. Sideways and boring. After yesterday, that's exactly what happened. Then we didn't get so boring. So be careful on those lunch spots today, guys. Gotta know those lunch spots, man.
I do think these are the most dangerous markets for people because of the fact that, yes, it's not only not going anywhere, but the high volatility nature that I talked about earlier, right? The fact that, again, from low to high is over 2%. This is where, as someone who worked at prop firms for ages, this is where most people got in trouble because they just didn't have the patience to sit there and do nothing. Because you're looking at these moves and you're saying, well, these are massive swings in the market. I should participate. There's a lot of money being left on the table. And that kind of thinking would get them to participate in trades that they shouldn't. And that hurt even more than, big spikes down or big spikes up. Because it's easier to stay out of a big spike down. Because as the market's just tanking, you get over the desire to try to pick a bottom very quickly in your trading career. But when you see something like this, and every time it looks like it's going to break out, and if it breaks out, it could be a really, really nice move. It just becomes really hard. And this is what, like Mitch, for example, is still in the same VIX trade for a long period of time, right? He's just
hanging
made
out.
my bet. There's my stop loss. There's my profit. I'm going to go with it. The problem people get is the in and out, in and out, in and out on the way up. That can just be an incredibly dangerous thing.
Just eats you up, right? Especially if you're tight on your risk here. This is why I talked about looking at things like ATR, right? Because if you're not weighing in the volatility in your decision and you're just like, I'm going to risk off the prior candle's high, this is an easy way to overtrade during this market. And then when you want to take a trade, you end up like myself yesterday or Eli like today, right? Where the trade goes in your direction that you were looking at. But when does it happen? After you're already out of ammo. That's what I've been seeing a lot of when you're out of ammo. And then when you're out of ammo, you get left watching moves. Watching moves is not fun. Like watching yesterday's VIX run was not fun for me. I'll be as honest as I can be, right? Because if I would have played it patiently and I would have played it with the right size, I could have had an all-day runner. And those are the trades that I feel are the real equity defining trades. If you're able to stick to one of those, find one of those every now and then, well, guess what? Even those RIPs aren't going to be that bad. If you can get every now and then a, let's say, 8-to-1 look, right? Where you got an 8 reward for a 1 risk. This is where I think it's important to understand, how do you ride trends like that, right? How do you maybe leave a stop and let it run, right? Things like that I think are very important. And in this market, it might make sense to go like big into momentum, quick profits, and leave a runner. That's the way that I'm seeing a lot of it. So when I get these quick momentum moves, drive on that momentum, take some quick profits, and look to see if it keeps going. Because what are we seeing? Drives and momentum, a little bit more, you get in, and then take down, right? Well, that's why when you get that little more, you're not taking that profits. I look at it as earlier today, right? When I was in even MBOT, I was up a little bit. I was getting a good little move, and then whoosh, right back down. Yesterday, the same thing with the VIX. I was up like a good 40, 60 bucks, 80 bucks, and all of a sudden, whoosh, right back down. This is the market where it can take the money from you. So you need to be able to also take little bits of money and then look for the bigger boom, right? Because if you would have got yesterday, taking some small cash, giving yourself a cushion, then you can take some hits. But if you don't have cushion on a day like today, your risk comes into play. And it almost feels like every trade you make is going towards the risk side. What does that tell us? You need to slow things down, probably. right? Versus where you're seeing trades go instantly green, right? Are you just seeing every trade you take go instantly red? That's a sign also.
Yeah,
Battle
it's
is on, man.
yeah, because if you look at the spies, we're right back down. Right, every time it looks like we're gonna break down, we bounce. Every time it looks gonna break out. And I really like what you said about the move happening later. And right, tinfoil
Yeah,
hat or whatever you want to call it, it's probably on purpose. Right, the market.
it is.
There
It
is
is.
so many emotions happening right now between bulls and bears, and people think the bottom's in, and people think it's going to be the next 2008, and nobody knows. So when you have big people making large bets constantly, you get this kind of move. And then you would get something like happens yesterday, where you have kind of a definitive event that comes out, and then the direction's decided. But uh, what you're seeing happening here is, again, people making bets, right? Giant bets, people putting $1 million long, millions of dollars short, and that's causing these spikes in the market. And then there'll be some sort of event, and I don't think it's going to be the FOMC minutes. I don't think the market cares about FOMC, and then you're going to get a move one way or the other. But until then, this becomes really, really hard. Which again, stick to your setups. Right, BTU worked, Pfizer isn't. You got to stop in place again. If the stop gets hit after the target got hit, it will be in that couple bucks a day. I can go to McDonald's, maybe feed the family there, but that'll be about it.
Lunch.
And then
Lunch. The survivor. Remember, we talk about the waves of trading. Right now, a survivor is not a bad mentality to have.
Yeah.
And
well, it's what I was talking about here, right? Is that yes, I'm buying. I bought all those names on Monday because the system told me to, and if this holds, great. But yeah, I'm very much in a survivor mentality, which I'm just thinking, if that low goes, I know I'm going to take a hit, and I know what that hit's roughly going to be, and then I'm going to move on with my days. And then if we hold, it'll be great. So yeah, it's that staying alive till eventually the bottom is kind of insured, and then when it is, hopefully you've got a good name with some relatively strong stocks, and you can do something from there. But until then, just try to stay alive.
Yeah, we're getting some more weakness here, guys. So might have to cut the position here on the VIX here. It's getting close to that trade here. The big thing, the only thing that I think could save here is kind of like 15-minute 9 EMA kind of holding in on the SPY and then eventually coming back through 500. So you just got to take bets. And I think part of it also is taking a bet, and sometimes you're going to win, sometimes you're going to lose. Especially in this market, I feel like it's going to be a lot more of the times where if you try to fight that bet, that's where you're going to hurt yourself a lot. So you got to like take the bet and see what happens. Let the market do the heavy lifting for you. If it doesn't heavy lift, well, you get out, you take your hit, you move on. But if not, it's an easy recipe to just keep trying to push into the market in this type of environment. That's recipe for disaster, I think.
Yeah, no, it's not the area to push it, right? Unless you've got some sort of wicked kind of mean reversion strategy that you're doing well, like nailing the tops and bottoms. There's just no trend here. Just look at this chart. There's no trend. You had a little bit of an opening range drive, and then ever since then, nothing's moved. You're right where you were in the first kind of 2 to 5 minutes of the market. Now, eventually, that might change like it did yesterday, but we were saying the same things here yesterday, that you had this opening range drive and then a whole lot of nothing. And then it let go, and down she goes. But it just gets very, very hard. So just, again, really reduce your size, really open up your stops. I really like the idea of using ATR. Like Mitch was saying, the only thing I would change the time frame on ATR. I'm doing what I mean here, and make it super short, right? So, because ATR defaults the last 14 days. And I'd make it much shorter. So, right. So for those who don't know, average true range essentially just represents, this is the average move each day over the last 14 days. But I would be more interested to see something like on the last 5 days. And the reason for that is just to show this is obviously more important, what's happening recently. You can go down to 1 day, and you can just see, okay, these are the moves yesterday, and use some sort of average here. You can see it's gone from 15 to 40. And I would just use these spikes and know, hey, over these couple days, we've been doing anywhere between 30 and 40 points a day. and then you adjust your position size accordingly. This is why constant risk or arm multiple trading, I think, is so huge. Which, so you look at something like Pfizer and BTU from today. I'm risking, say, $100 on each of these trades. Well, it doesn't matter if it's a crazy volatile stock. If it was a insanely volatile name, then again, just $100 just to make the math easy. You're going to be trading maybe only a handful of shares. And then if it's a really slow name, you're going to be trading multiple hundreds of shares, and you're just adjusting it based off of the range that's already taken place. I think it's not only a good idea, I think it's absolutely paramount in this market. Either do it yourself or do it through some sort of systematic approach, which again, ATR would be, and just say, okay, this is how I'm going to utilize range, or stops at high days, low days. We know they're not ideal places to put stop losses because it's where everyone does, but it gives you a good bet of saying this is what, so for $500 risk on Pfizer, it would be 1,000 shares. If we did something like the BPU, right, it'd be only 400 shares. So again, you're just adjusting it based off how volatile the stock is, and you're able to do that pretty easily. And if it's hard to do that kind of math, then find some tool to help. Again, ATR is a great one, but just adjust your position sizing according to volatility, because there's nothing saying too that this volatility has to continue until news is resolved. We could just live in this state of chaos where the ATR could continue to decrease, and we could just live between 524 and 482 for a couple weeks. We could just kind of consolidate here. That would shrink the ATR, and then you want a system to make sure that you're expanding your trade size accordingly. This kind of risk management talk, I know, is not sexy, but it really is absolutely everything when it comes
What?
to
Not sexy? Yeah, of course. That's what risk management is. It's not a term that gets brought up with the big moves. Of course, that's just reward outlook. I think risk management really just defines day traders. Really, at the end of the day, it's what's going to separate your equity curve, right? Everybody sees equity curves go down. The best traders limit the down actions, right? That's why I always talk about let's not let one trade make or break us. If we have that mentality, we can be safe. When we start to try to make one trade make us, that is opening us up to danger. When we try to let one trade break us, then we're just letting one trade literally ruin all our hard work, right? So don't forget that, guys. I think what you should be thinking is on both sides, right? I'm not going to let one trade make me, so I'm not going to go and just put all my eggs in a basket on one trade, but I'm also not going to let that one trade break me. And in this environment, it's especially important to not let one trade break you, because easily it can ruin your confidence. And the number one thing that I think is important as a trader is to keep that confidence. Once you lose that confidence, I'll tell you right now, you might as well become a copycat trader, because at that point, you're going to not be able to trust your own instincts. And one thing is building in kind of your own mentality of what you want to go after, right? Even if you're systematic, you're going to have to either probably adjust to where the system takes the trade for you, because your decision making is just in the gutter, right? And so we need to be building ourselves and confidence. That's what I think Michael also does really well by building systems. He gets the confidence not from his own ability, but from the system itself, right? And I think that that's the important thing. Where's your confidence, guys? Where's the skill level? Ask yourselves these questions so that you can make step up, right? If you don't ask yourself these questions, where am I right now in my skill level? Where am I in my emotional game, right? What am I doing with my systems? What are my systems doing right now? How are the strategies working or not working? All things to be asking yourselves in these times of high volatility.
Well, yeah, and even if you are, if you're someone who is, you don't want to be systematic in your trading like I am. Like, you have a setup and you just take the setup regardless and you move on. You should always, I always recommend everyone is systematic in your risk, right? So a couple ways to do it. The easiest one and the most common one, if you're trading your own account, is a simple percentage of your account. That's probably the thing that everyone here has heard of. 0.5% to 1% of the value of your account. The beauty of that is that as your account shrinks during bad times, your position size shrinks. As your account grows during good times, your position size grows. What I've been looking to do a little bit more with these prop firms is looking at the area in which you blow the account and then dividing that by like 10, right? So say, for example, you've got, $1,000 of risk in your account until the account's gone. What you do is at the beginning of every day, you look at that value and you divide it by 10. You say, okay, so if I take 10 bad trades in a row, I'll lose the account. So again, using that $1,000 to make the number round, you're risking $100 on every trade, and that should be calculated before you enter the trade. And then let's say you're doing well and you're building up that account size, and now you've got $2,000 before the account's gone. Well, now you're risking $200 on every trade. And let's say something bad happens and you get stopped out one day. Now you only have $500 left in the account. Well, now you're risking $50 on every given trade. And the idea is that by adjusting your size based off something, if it's your own account, a percentage of your account, if it's a prop account, it's how much room you have until the account's gone. By doing that, you're just always going to stay in the game, because what's going to happen is as you get closer and closer to the stop out level, your size is going to get smaller and smaller until you start to recover. And then as that grows, it will grow again. So, really, really sit and think and take some time and take some energy and say, how am I going to size my trades? Because you can take, and I can show you the math, you can take a pretty bad strategy, something like a 55% win rate and a 1-to-1 risk reward, which is enough to make money, but it's not the most amazing strategy in the world. And with the right position sizing, that can make you a whole lot of money. And with the wrong position size, you can get absolutely killed. So, systematize, again, the risk side of things, if nothing else. And then it's one less thing to think about. If you know how much you're going to risk on every trade before you hit the button, it's just one less thing to think about when it's time to hit the button. So you can spend more time focusing on the charts and the setup and the news or whatever it is that you end up trading.
All right, guys, we might get this liquidity move here, and then we'll look to see if we get some reversal. But the VIX is trying to shoot up here, guys. So just be careful out there, traders. We'll see what happens here, guys. It's going to be a tough one. That's for sure.
Yeah, we are under VWAP, pretty much back to the open. Right? The opening price is right here. So we're pretty much back to the open. And then through that, the only thing left to look at is the pre-market low. If we end up losing that pre-market low, that's pretty significant. Because if you zoom out, that is very close to the ultimate low, which is kind of 480. And under that, it's just another leg down in the markets, which would be wildly unfortunate, but could happen. Right? So yeah, under VWAP. So it's one of those. I bet you my fives are. I didn't even have it open to look at, but it's actually holding up pretty well. So let's say I bet you my fives get killed. But right, it's just, if we can't reclaim this VWAP pretty quickly, we break lows of the day, then yes, we got to watch 45 to 46. That's the pre-market lows. That's the next big area of interest. And the way the market's been moving, could get there pretty quick.
All right, guys, VIX has jumped there. I got cut out there on that spike there through the 88. So I'm out, guys. We'll see what happens if it does turn around. I gave it the chance. It just didn't work out. Maybe even still a little bit too big. And I went smaller, guys. I went a lot smaller. I still couldn't hang around for the move there. So that just goes to show you that it's literally ridiculous, the volatility that we're getting right now. We just got to hang in there. We'll see what happens. VIX now getting the jump and doing the same move that it did yesterday. Pretty much 15-minute reversals off the action, off the support, and now going to the 88s. Definitely is going to put some pressure on the bulls. The VIX getting the move again here. We'll see what happens, guys. You can see it here. Did this reversal yesterday right around in this area, 82, 83. We went right back to that area today and found buyers right back in the same area. So right back into that hourly support. You're finding buyers. And right now, I think what we need to start looking at is just using hourly charts to try to help us out so that we don't buy or sell anywhere in the middle of the charts. You don't want to be in the middle right now in any chart. I feel like you need to make sure you're getting closer and closer to those hourly supports. Or let's say if I'm shorting, hourly resistance and trying to avoid being stuck in the middle of the charts. If you're stuck in the middle right now, that's how you're going to get ripped. If you were shorting the SPY at 500, how much pressure did you take? If you're longing down here, right, into the 487s, how much pressure did you take? This is what I think is important right now. Using hourly charts or further time frames to try to help you with the risk to reward setups that can at least help you get into a setup where you're getting in through these wicks and getting in, let's say, shorting through that wick versus just trying to catch the middle of the chart, like going long here 495. You're stuck. You're in the middle. You're a pig. And that is not the place to be right now in this market. You either need to be leaning bullish or leaning bearish, and that's hard. It's hard in this environment.
In the middle of what's a massive range. So I just said you're talking with the VIX, right? I talk about this all the time. A lot of people don't know, but right, the VIX, again, it's just how many people are buying puts on the S&P 500. That's what controls the VIX. And one trick you can do is you take the price of the VIX, make sure it's the VIX, not ETF derivative, but divided by 16. That's what the market is expecting for an average daily move, right? So take 52 divided by 16, 3.25. So that's what it's expecting, a daily move on the S&P 500 of 3.25% right now, which is just insane. For reference, just go back, right? Not even that long ago. Just go back to here, right? When it's 15, it's obviously going to be less than 1%. It's going to be a 0.9% back here. So we're 3 times what we normally are for range. And again, you can see these spikes, right? This one would have been the end carry unwind. But when you go back, again, the VIX on the long-term chart is generally just mean reverting because that's what happens, right? People buy a lot of puts in the SPY. Generally, when they get to pretty extreme levels, at some sort of short-term bottom, right? So this is 2008. Right here is 2020. And we are pretty much right back. There's the yen carry unwind. We're pretty much back there again. So just showing that, this is why trading is either really, really good for you if you nail the right direction, or getting you killed, right? Just know that these inflated volatility environments, they don't last forever, but they're really, really hard to trade when they do, right? So again, a nice little push up here on the VXX, right? So this again, the volatility. So to calculate the range using 0 DTE options, the same kind of idea, right? The idea is pretty simple here, where it's right. This thing doesn't move on its own. This doesn't move because there's buyers and sellers out there on the VIX, right? It just moves based on how many people are buying. That's why they call it the fear index, right? Because more people buying puts on the S&P 500, they're basically just saying I'm scared, so that's why prices are increased. Which is again why I talk about how I've got buddies who, if the VIX is high like this, they're doing 2 things. They're selling options, selling condors and things like that to generate a lot of income, and they're day trading. When the VIX goes back down to that 20 area, they're swing trading and potentially buying options to make swing trades. And you'll see that a lot because, again, it's just representing how many people are buying options. So therefore, options right now are incredibly inflated in value. So if you had the guts, now's the time to be selling. I don't, but there's a lot of people out there who just do iron condors in the S&P 500 kind of over and over and over again when volatility is high, and they end up doing great. So if you're one of those people, good for you. I just don't have the guts to be one of those people.
All right, guys, we'll find out who won the competition tomorrow, guys. Definitely stick around tomorrow. I'll be announcing the winners in each tier for their prize. Definitely took a battle. Had a really good first day in it, and just came into 2 days of some struggle. But hey, that's just how it is in the markets right now. It's not going to be easy. Definitely, it's going to be looking like the funded account, even for me, is in trouble here. So we'll see what happens. Probably going to have to jump onto a new eval and keep battling. Hasn't been easy with the 20,000 account, and I even adjusted away from some of those small caps, and it just hasn't been easy, guys. Been able to get it back towards break even multiple times, kept it for over 2 months, so at least I can give myself a pat on the back for that one. But overall, need to find a way to keep making winning trades in this environment. It's not easy. VIX getting the jump now. FXI really starting to collapse there. So China really starting to take a hit there. Of course, if that comes back in, the worry for China comes back in, and boom, we start to see the cut down. Look at the VXX jumping now, 89.17. So same trade that happened yesterday is working out again. So what has been happening? It's buy the dips, but on the opposite side, on the VIX side of the things that have been working. If you're buying dips on the SPY, you're probably getting destroyed right now. And I think that that's the tough part about things. If you're trying to play the bottom, well, it hasn't come right now, at least from the action that we've been seeing. No sustained rally, just more along. You need to be looking at, long-term lows to see if those hold. But the SPY could be approaching that today, guys. We break 487. We break down through 481 tomorrow. And now you really start getting that panic mode that we talked about, where it's a sell everything moment. I'm waiting for that moment to happen to see what happens there, to start making some bigger bets to the upside. We'll see what happens. The SPY, of course, going through one wave, second wave. We're sideways on that second wave. Huge range expansion. If you think about it, from 523 to 481, that's a massive range, guys. I mean, that is massive, man. You don't expect to see 40 points range, essentially, here on the SPY. You don't expect to see that, guys. 40 points is pretty wide there for the price range to be going down, up there, down, up here. Now, the one thing that's a caveat, of course, is we couldn't get back above the 502 today. So that puts more pressure on the bulls, I feel like. But everyone's just waiting for this low here, the 7. Will that low break? If that low breaks, I think that's where you really get capitulation, where even the bulls that thought they had the low there start to let go, right? We'll see what happens there if that does come into play. Of course, we'll be back tomorrow, guys. And then, of course, it'll be coming into CPI day, and CPI is going to be massively important. I think what it'll show is essentially that inflation's still coming down, and that's a negative thing, I think, in this case, right? I don't know, man. It's a tough one. It's a tough one for the Fed. They don't have many options. They have one option, I think. That's just wait and wait and wait and be patient. Yeah. And so that's not a good thing, at least if you're expecting quick turnarounds, because, of course, if the market's going to turn around, part of that is going to be either two things. It could either be tariffs or cuts on the interest rates. So you need to be watching those conversations, seeing what happens, seeing when do we finally get a deal. Another thing that was mentioned, I think, and I think it was important, was I saw conversations that these talks could last all the way until June. If it happens until June, if in June is when we get these deals, you're talking what, 2 months, 3 months from now, or 2 months from now? I mean, that's going to be tough. The markets could be further down by that point, right? Then we could come back into an up rally. That's why I think that the sellout moment hasn't happened just yet. I think we got to be a little bit careful for that moment. Some bulls have capitulated, but I don't think they're broken by any means necessary. I think we need to start seeing when you start to see everyone start leaning over, the bulls start to get a little bit scared. I don't think you've seen the bulls get scared yet. The bears are singing in the street. They can't be wrong because they're in the middle of the chart right now. But I think that's the tough part right now, is deciding what happens next, guys. Be safe out there. We'll be here along for the journey, whether it's up or down. The fun part is there's always opportunities to make money, even on the downside. So maybe you need to start adjusting strategies and looking for strategies, not necessarily trading them, but how could I trade in this environment? We'll see what happens. Like always, guys, winning strategies for high volatility environments. We talked about it a lot to do with understanding the volatility and your share size. We'll see you next time right here, and keep battling out there, Mark. Keep battling in the markets. It's not easy.